Hello and welcome to BQ Prime. A very good morning to all the viewers, and clearly a good day for the markets as well. Taking the way the Nifty is moving, 18,600 is what we've been able to sustain so far. And interestingly, you have the FMCG as well as the auto index that have had hit record high levels in today's day of trade. A lot of stocks and sectors that we will be discussing in the next 15 to 20 minutes of the show. And joining us on the show is Ashish Maheshwari, Director at Blue Ocean Strategic Advisors. Ashish, good morning and welcome to the show.
Thank you very much.
Ashish, let's start off with the oil and gas companies. You have crude, which did shoot up in trade, and this was mainly on the back of the production cut that Saudi Arabia has announced individually. Now, what's the kind of impact you're seeing in terms of OMCs, number one? Secondly, in terms of your upstream, downstream, as well as paint companies?
See, if I try to analyze what may be the temporary impact of this, surely crude prices have moved up slightly from Friday closing. But going forward, also, I'm not expecting any major upside in the crude prices, and nobody's, too gung-ho that crude will again touch $100 or so, because the way things are moving globally, the kind of unrest is in so many countries, and the economic activities are at moderate level. Crude prices cannot go much higher. So this is the reason market is not taking this negative, first of all. And second thing, the OPEC has also said in FY24 almost 1.2 million barrel per day they will reduce production. But still, as demand is not there, so whatever the price cuts are there, I think they are going to be a temporary phenomenon. As far as OMCs are concerned, they are on good path of recovery, whatever the under recoveries were there of previous year. And in my view, because of Russian cheap oil, etc., they will continue to do well. So I'm also not that bearish as far as oil marketing companies are concerned, but beneficial for surely for upstream companies like ONGC or Oil India if prices moves up from here, as well as for paint companies. I'm not that much worried as such, because I don't think so price will come $85-90 in hurry. It will take surely some time. And the way demand is picking up in paint industry, they will surely able to pass on. So, in my view, there's a neutral effect, and there's what market is also giving thumbs down to all those things. And in a couple of days, it will be get neutralized, and there will be no impact further.
Right. No impact further coming in, as Ashish is mentioning. Moving on, Ashish, you have the auto index, which has hit record high levels in today's session. All eyes are in terms of Tata Motors as well, because you do have a meeting which is slated overall. Plus, you have the auto sales numbers that have trickled in. You have the Class 8 truck orders that have come in, on the back of which you have a Bharat Forge as well as a Ramki forging also that is in focus. Firstly, your view in terms of the auto counters, and specifically, what would you advise to do with the Tata Motors?
We see Nifty Auto Index in last 3 months. This has given a return of almost 14%, and this is on account of aggressive FI buying which is happening in this particular space. Because again, this is a sector which is more domestic or inward-looking sector, and here. Like for India has to grow by 7% plus GDP, or automobile sector they need to grow for sure. Another thing is that India is on track of for selling almost 40 lakh vehicles this year as such. So demand is quite robust. We have seen the last monthly sales numbers. A lot of companies, or majority of the companies, were able to chalk out double-digit growth, except few. So this is a sector looking good. Tata Motors again is a stock which will continue to perform, because again 6% was the sales number increase, but almost they are at just 10% away from 50,000 mark in passenger vehicle uh, in Indian market as such, and the EV is again fueling their growth. So in my view, Tata Motors will continue to do well. As far as Other stocks which you have shared is Bharat Forge and Ramakrishna Forging. Both are again pretty good companies, and Bharat Forge we have seen very good set of numbers, good expansion in the margin, and one again trigger is there's this not only now auto company. They are ventured into big way into defense in EV and renewable energy related products. So Bharat Forge, in my view, continue to do well. And ditto for Ramakrishna Forging. They are on board of almost all major CV players, and the kind of export orders are again coming in this company. The stock is no wonder very near to 52 week high. So both these companies, Bharat Forge or Ramakrishna Forging will continue to do well. Along with, I'm very bullish at Tata Motors. My price target for Tata Motors this year is 600 plus.
Right. Moving on, let's pick up the IT pack. Now, IT as an index is up almost 10% from the recent lows it hit in the month of April. And if you see the kind of performance, it's the mid cap IT counters which are moving much faster than the large cap IT names as well. Now, an interesting move over here is in terms of the up move that it or the if you compare it to Nasdaq as well, Nasdaq has seen a growth of almost around 23-24% in calendar year 23 so far. IT has a lot of catch up to do from here on. How are you looking at the IT majors as well as the mid cap companies? And one stock which is coming up is a Cyient, because the kind of moves we've seen.
As far as IT stocks are concerned, again, this is a index. This is a sector which is again trying to catch up what you were saying. So in last 1 month, is IT index has also gone up by 6 odd percent. Though at 3 months this is almost at par. It has not given any return because of poor performance of large cap stock. But in my view, now really time has come, because if US market will start doing well, there's no reason IT will be a laggard. So for sure, you need to focus on this particular sector where specific companies are doing well. As far as you have spoken about Cyient, again, this is a company which has come out very good set of numbers in last quarter, because of services growth is quite high compared to what their manufacturing and chip related growth is there. Even operating profit margin level, we have seen a lot of improvement, along with the kind of profitability over quarter is improving. Their 5G related growth is again picking up. Mobility is picking up. So if I see valuation wise, I call it this is a younger brother of LTTS, and it is just available at half valuation. If I see in price earning multiple wise at 50% discount to where LTTS is quoting. So scientist surely a buy in my list, and 6 month target is around 1550 for me.
Right, so that's with regards to where IT goes. Moving on, you have companies like a Mahindra Finance, which reported their monthly numbers as well. The disbursements look pretty strong. What's your view?
Yes, company like Mahindra and Mahindra Finance is again near 52-week high. If you see the price performance, and disbursements are going up again, there are two, three drivers for this growth. First, there's very significant demand pickup in the rural side, so where they are having major presence. Second, Mahindra and Mahindra is doing very well, and if Mahindra and Mahindra will do well, Mahindra and Mahindra financials, because they support whatever the vehicle sales are there, this will continue to do well. Third, again, trigger is there's a lot of demand which is again picking up in second-hand vehicles, and not too many players are funding second-hand vehicles. So Mahindra and Mahindra is again financial services, again getting a lot of business there. And the last is they have also ventured into SME and MSME finance, loan against property, all those kind of products where good demand is again there. So, in my view, this again stock should be kept on radar. This will continue to do well, and another 6 months, my price target is 350, 360 here also.
Right. Moving on, you have a Paytm that is in focus, Ashish, and this is again for their May update that they've come up with. The disbursements are at around 5,500 odd crores. And if you see in terms of the merchants who are paying subscription now, it's around 75 lakh merchants, which is up by almost 4 lakh. And this is adding to its average monthly transaction by almost 24%. That's the growth that we've seen. What's your view on a Paytm?
Yes, Paytm is again, if I see business model wise, every third Indian is having now Paytm in their mobile, which is a significant achievement. Second thing, their Soundbox product is getting a lot of traction all in the shopkeeper segment, and because this is a segment where this is again picking up the digital payment, and the Soundbox, the product which company has created 3 years back, this is also getting a lot of interest. And again, the way UPI incentives, etc., they are getting is also contributing a lot. But major triggers are going to be this disbursement of financial services or Paytm postpaid related product, or the kind of fee income that they are generating from banks. I think this will continue to gain further momentum, and the net losses of company, which we have seen from 390 to 170 crore in the last quarter, will continuously come down, because whatever investment was there, this is already being done. In FY25, again, I'm expecting now they will be from EBITDA positive, they will be net profit positive in next year. So this is again a stock to watch. 1 year target for Paytm is 900 rupees now.
Right, so that's a 900 target coming in with regards to where Paytm goes. Moving on, you have cement companies also that are in focus. Now, clearly, there is good visibility in terms of where volume growth goes. The raw material prices have started to come off. However, one aspect that they've been considering so far is a price hike that could be anticipated in the month of June. Now, whether the markets go ahead and absorb that kind of price hike or not is something we need to wait and watch. How are you looking at the cement pack, and what would your topics be?
Like there's a normal phenomenon where before the monsoon sets in, the cement companies always increase the price, and this is going to happen this time also. Again, the key triggers are infrastructure projects are having very good offtake of cement as such. Number one. Number two, if you see pan India basis, almost in every city there are new projects, new residential complexes, new malls, and commercial buildings are coming up, which are just guzzling the cement. So this is again a trigger which will keep the momentum going higher for cement. And third is as this is fully inbound economy, there is no import of cement, whatever the prices are there. So this is again a positive. In my view, here Ultratech Cement as a pan India player and India Cement as a specialist player in southern India, they will be doing very well in coming time also. And overall sector looks good. But only thing is we need to be slight selective while picking a stock. I'll give my couple of picks.
Right. So that's with regards to where the cement pack is concerned. Moving on from the pharma pack over Indoco Remedies that is in focus. And this is because the US FDA has inspected its sterile facility, which is located at Goa. And the inspection was done between the 20th of February to the 28th of February. And they've had 4 observations in the form of 483. What's your view on Indoco Remedies?
If you see Indoco, like this underperformer for quite some time in pharma pack. In fact, there's a stock which is near 52-week low, while other some good names are near 52-week high. So again, the challenges company is facing is slowing down in net profit. Even the sales growth is not that good. Even we saw from December to March, net profit went down by 28 now to 25 crore, which company other companies have shown still reasonable growth, and the top line growth was also very slow. So my suggestion will be to avoid Indico remedies. I think these form for 483 etc. is a small aberration, but overall company performance is not looking that great.
Right, so that's with regards to where Indoco Remedies goes. How are you looking at a Glenmark as well? because that's another one, and an Aurobindo. Both these counters have been in focus. What's your view?
I'll go with Glenmark. Though Aurobindo has also picked up very well, and but in my view, Glenmark is a stock which can be kept on radar. Again, the reason is first of all, 20% they have shown EBITDA growth year over year, which is quite promising. Then Ryaltris is their new drug, which is getting launched, and I'm expecting very good sales is going to come from there. Third is they have reduced their R&D related expenses in the last quarter, so it reflected well in the numbers. Then Glenmark is again a very prominent player in domestic formulation business, and that business is doing well. We have seen companies like Mankind Pharma doing great, and it is only on account of strong domestic presence. So this is a company again, in my view, they are focusing now on more domestic side. So market share will surely catch up here because of good distribution channel what they are having. So I'll prefer more Glenmark Pharma than Aurobindo Pharma.
Right. So a Glenmark preferred to an Aurobindo Pharma in terms of where the pharma pack is concerned. So a lot of movers and shakers, Ashish, in trade today. And again, a lot of sector specific moves is what we are seeing. We already, as we mentioned, the FMCG as well as the auto index have hit record high levels. The mid cap is already trading at record high levels. However, it's the Nifty as well as Bank Nifty which is seeing some bit of consolidation. Thank you so much for joining us on the show and sharing those views. Stay safe. Speak to you soon again. And in fact, for the viewers as well, a lots more lined up on the other side. Please stay tuned.